Range-bound session sees the Nifty and the Sensex end 0.5% higher. The Nifty continues to face resistance at 25,000. IT stocks lend support. Broader markets underperform the blue chips.
The union government is making efforts to notify GST cuts as early as possible ahead of the festive season. Auto companies urge the centre to implement new GST rates to coincide with the Navratri period on September 22nd. The GST Council is scheduled to meet on the 3rd and 4th of September.
Expectations of an interest cut after dovish comments from the Fed Chair Jerome Powell combined with attractive valuations lift IT stocks. Several brokerages issue buy calls on large and mid caps. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Mehta and with me is my colleague Vamakshi. Well, Vamakshi, what a day it was. Range-bound, you would have to say, but it was IT which really shone in today's trading session. But it seems as though there is that resistance coming in at 25,000 for the Nifty. Maybe it's wait and watch to see what the next couple of days look like. 27th August is going to be a critical day in terms of what happens. The markets are closed, but nonetheless on the macro front.
Well, absolutely, Ekta. At least one good thing is we're at least off to a green start for this truncated week. Not taking away from the fact that, of course, 27th August is the big deadline. But take a look at Nifty IT, like you said, that was a sector that was flying high. When we look at Nifty IT, no losers out here. Infosys did very well, was up almost 3%. TCS, HCL Tech, Emphasis, all of these counters were soaring in trade today. What also did well were the real stocks because we saw some good gains come in on Shobha, DLF as well as Raymond. What did not do well is Nifty Media. Keep in mind that Nazara Tech continues to decline, down almost 3.5%. Z is one other counter that is taking a hit as well, down almost 3% or so. And PVR Inox was also lower in trade today. But, Ekta, let's get a move on then. Here's a lineup of what we have in store for you today. We start with the top movers and shakers of the day. With Vivek Iyer, IT stocks rallied on rate cut hopes and Fed Chair Jerome Powell's dovish comments. Mazagaon Dock surged following Defence Ministry's nod for submarine contract talks. Meanwhile, paper stocks soar after the government imposed a minimum import price on virgin multi-layer paperboard. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session.
All right, well, those were a couple of things to watch out for in the next 30-odd minutes. Let's get to our first segment of the day. Vivek Iyer joins in from the big wall with all of the top movers and shakers of the day. Vivek, over to you.
Well, thank you so much for that. Nothing much to complain in terms of how we started the week. A very strong move, especially the IT pack. Like you mentioned, hopes of a rate cut is something that has aided the momentum yesterday. A couple of brokerage upgrades too. TCS, Infosys, both of them saw upgrades from different brokerages. Back of that, the entire IT pack did very well in the session today. TCS and Infy leading the gains. Not only that, the mid-cap IT stocks, the mid-cap ITES names too did quite well in the session. So names like News and Software, eClerx, Sonata, Mastech, LatentView, all of these stocks too were among the top 10 gainers as far as the NSE 500 index was concerned. Paper stocks, we spoke about, the imposition of the MIP, something that aided the domestic industry, and over there you saw all of the stocks doing very well. Strong volumes, double-digit gains was what the paper stocks enjoyed in today's trading session. Idea, one stock from the broader end of the markets. This particular stock has seen a resurgence in the last 3 to 4 trading sessions. Hopes of some amount of relief coming in on AGR dues is something that is keeping this stock quite active. And to round off the top 5 in terms of the gainers, have a look at ACE, that is Action Construction. This stock was amongst the top gainers on the NSE 500. Very strong volumes today. Some hopes coming in terms of rationalization as far as GST rates are concerned over here. In terms of the stocks that moved with a negative bias, select capital market stocks continue to remain under pressure. Angel one of the top F&O laggards today. Wari as well as Premier ahead of Vikram Solar's listing tomorrow. Both of these stocks saw a bit of selling pressure. Also remember, Wari has significant exposure to the US market. You're actually seeing some amount of negative news flow coming about. Sundaram Finance, this particular stock, amongst the top laggards as far as the NSE 500 was concerned. And lastly, look at Imami. This particular stock saw a large block deal around 1 p.m. Post which, the stock didn't really recover much, almost 4% lower as far as Imami is concerned today.
Well, thank you so much for that, Vivek. Those were the top stock movers. But let's go across to our guest now, Anand Tandon, who's a market expert, and Somil Mehta from Mirae Asset, Sharekhan, join us today. Well, good afternoon to you, gentlemen. My first question is to you, Somil. What do you make of the move that we've seen today? Can this up move that we've seen, at least at the beginning of this week, sustain going forward?
Absolutely. I'm a little positive on the markets. Last week, we saw a sharp correction till 40 daily moving average. And that's a very, very crucial support in the very short term. The next support is at 20 daily moving average, which is at 24,740. So these are the two levels which we need to keep an eye on as support on the downside. Overall, I think the trend is up. And in the short term, in the medium term, both. And I'll be expecting a target of around 25,250, which is the previous swing high. And above that, another swing is at 25,550, which will be my second target. So I'm pretty positive on the markets. Reliance is looking good. Bharti is looking good in the heavyweights. Also, pharma sector is looking great. Even the metal sector is looking good. Hindalco, Vedanta is looking great. On the banks are a little concerning from here because the sharp sell-off we saw last week was taking resistance at 20 and 40 daily moving average, and we saw a very sharp correction, which is very concerning. From here, the support is around 54,900, and below that 54,700, 600 zone. I'm expecting Bank Nifty to take support around 54,900, and again resume the uptrend in the medium term outlook. So my targets would be around 55,900 and above that 56,500. So my targets are pretty up, and I'll be expecting Bank Nifty to take support around 54,900.
Okay, all right. Well, let's move on to the big story that we're tracking. The Union government is making efforts to notify GST cuts as early as possible ahead of the festive season. Auto companies urge the centre to implement new GST rates to coincide with the Navratri period on September 22nd. Timsy is here with more details on this. Timsy.
Well, let me first put these things into perspective. It is very clear that the government does not have any festival season in mind. The only thing that is in mind of the government is that the feelers that they are getting from the field, that people are delaying their decision to buy. So be it Navratri or Diwali, or for that matter Ganpati or Govinda, these are not in the minds of the government. What is in mind of the government is a consumption boost, which is the primary idea towards going ahead with these GST reforms at this point in time. And thus what sources are indicating to us is the fact that the centre is preparing for an early rollout of the GST rate cuts, which could be as soon as possible. But mind you, the apex body to clear these rate cuts is GST Council, which is meeting on 3rd and 4th of September. So if all goes through as per the plan, if states agree in the GST Council, if there is a unanimous decision at the GST Council, then the centre is aiming to roll out these rate cuts as soon as possible. When it comes to the preparation, the centre is ready at their end. They are also gearing up to the fact, to the representations that they are getting from across the industry, that the industry needs a transition time. The HSN codes will not change. They never change. The only thing that changes is the rates that are written against the HSN code in the back end. So that upgradation from the center side is ready. The industry will be given a transition time. Also, one key question over here, will this actually be happening in the upcoming GST Council? As I said, it is the council which takes the decision. States have put forward their concerns on revenues. If centre is able to assure the states, if centre is able to convince the states, only then the council can agree to this decision. And when this decision happens, then how soon will it come into light is as soon as possible. There is no deadline with the centre.
Absolutely, Timsy. Very important. We'll be watching out for that GST Council meeting on the 3rd and 4th of September and the outcome that comes through. But, Anand, if you can come in here, the GST rate rationalization is expected to boost consumption. So any particular stock from the consumption basket or perhaps a sub-segment of the consumption basket that you're looking at, if you can highlight a couple of stocks there?
I don't want to recommend stocks, but it's very clear that the idea behind the GST number of rate reduction is simply to increase consumption at a time when we normally have a boost in consumption anyway. This is a festive season. More or less 40 to 50% of the entire annual sales of consumer durables and consumer-related products happens in this period. So if you miss this, then you're not going to make much headway this year. So there will be a bit of pressure for the government to get on with it. And clearly the areas that you'll be looking for are things like, home products and automobiles, etc.
Okay, all right. Well, now we do have Rima who's joining in. She, the expectations of an interest cut after dovish comments from the Fed Chair Jerome Powell combined with attractive valuations has really lifted IT stocks. Several brokerages have also issued buy calls on large and mid caps. Rima's here with more details on what is keeping IT buzzing. Rima, over to you.
Thanks so much for that. So let me start with Investec, which basically says the risk reward is now turning favorable for IT. IT companies are offering a share return of about 10 to 15% for the next 1 year, whereas just a couple of months back, they were offering limited return. They've upgraded Infosys to a buy. Their target price stands at 1,655, but they also like TCS. They also like an emphasis, a KPIT Tech and a Zensar Technology in the mid-cap space. But what's also fueling the optimism today is JP Morgan's note on TCS. Remember, JP Morgan has been quite negative on IT. They've said that AI is deflationary, it's going to hurt. But today they've come out with a note on TCS saying that upgrading TCS to an overweight with a target price of 3,800. And what's underpinning it is that perhaps the worst is over. The stock has underperformed. It's underperformed the Nifty by 29% in this year so far. Growth expectations have bottomed out. Any turn in the market environment will benefit. And plus, valuations are now much below the 5-year average, 2 standard deviations below 5-year average. The stock is trading at sub 20 times, 19.7 times. 2 year forward, whereas historically in the last 5 years, the valuation of TCS used to be 24, 25 times. So keeping all that, JP Morgan today has upgraded TCS.
Okay, all right, Rima, thanks very much for that. Well, Anand, do you think that this is the time to buy IT?
From a rotational perspective, maybe. It's been a sector which has not done well. But from a fundamental point of view, I would rather wait for a little more evidence to come through that there is a turnaround. Saying that, the risk return is in your favor is an expectation. There is no evidence to show that the order books are becoming a little more robust. In fact, the commentary that you get from the international consulting firms continues to be rather bleak. So from that perspective, I don't expect to see any major upside in terms of the earnings or bottom line increase. It will still remain pretty much in the single digits.
All right, Anand. But moving on then, Mazagaon Dock gained 1.5% after it was granted approval to commence negotiations for a 70,000 crore rupee submarine contract with ThyssenKrupp. Parikshit joins us with more details on this. Parikshit, take us through all the contours.
Well, this deal had been in the works for a very long time. We had earlier reported that the Ministry of Defence the technical committee of the Ministry of Defence had chosen the bid by Mazagaon Dock Limited and ThyssenKrupp, which is a German marine manufacturer, as the bid which qualifies the criteria that had been laid down by the Ministry of Defence. Now we're told another step forward has taken place and the ministry has given the go-ahead to MDL to go ahead with cost negotiations. Now, cost negotiations for this 70,000 crore project will have to be completed in the next 6 months, following which the contract is likely to be awarded to Mazagaon Dock Limited. Now, these are very advanced submarines that we are talking about. They will be built with air-independent propulsion systems, which will allow them to be submerged in water for about 3 weeks or so. And the projects also aim to boost India's indigenous manufacturing capability, R&D and manufacturing capability in the submarine domain. And we're looking at 6 advanced submarines being built under this program.
Okay, all right, Parikshit. Thanks very much for that. That's on Mazagaon Docks. But the one space that I've been watching today is the CRDMO space. Jeffries has written on it. They've said that the industry is at an inflection point, and from being known as a cram sidekick, it is now being in the global spotlight. It's evolving from a quasi-chemical firm to strategic partners for innovators. This is backed by capabilities as well as geographical diversification. Now, according to them, they believe China Plus One is a structural story. China Plus One can drive high-teen revenue CAGR for the next decade. And they expect 18% CAGR during FY 25 to 30. China Plus One can be an annual $700 million sales opportunity in the base case and $1.4 billion in the bull case. The key risk is in licensing deals by Big Pharma with China. They've initiated a buy on Cohan's target price 1150, upgraded Divi's to buy with a target price of 7150, and Sai Life as well as Piramal are both top picks, and they believe that they have strong late-stage portfolios. But Anand, would you have a view on a couple of these stocks, say the Cohan's as well as the Sai Lives of the world? Would they be good buying opportunities now?
Well, they certainly have a good runway ahead of them, as the report indicates. There is, it's not as if there is a new sector that has opened up. India has been a supplier, and many of these companies have had fairly long-running relationships with the innovating companies globally. And therefore, it's a matter of time and size before these companies become meaningful in terms of the overall strategic portfolio. Companies like Piramal, etc., have made it clear that they are not going to be in competing products, and therefore it gives a lot of comfort to the innovator to partner with them. The challenge, however, is always that whenever it comes to the chemistry, while India has been good with making the products from a certain stage, the key starting materials still continue to be imported from China, and that has always been our Achilles heel, as it were. Because if you are not going to be making your starting from the key chemicals, there will always be a chance that China will undercut. So long as the reputation of the Indian companies remain better than Chinese, it is very likely that this is a sector that will do well. But we need to be careful about the fact that the KSMs also need to be made in India.
All right. Thank you for that, Anand. But moving on, let's put the spotlight on the paper stocks. JK Paper, TNPL and other paper stocks rose up to almost 17% after the government imposed a minimum import price on virgin multi-layer paperboard, a move aimed at curbing cheaper imports. My colleague Upasna is here with more details on this. Upasna?
Well, paper stocks were certainly flying high in trade today now, which is why government has imposed a minimum import price of 67,220 per metric ton on virgin multi-layer paperboard, that is VPB, on imports till 31st of March 2026. Now, this move is positive for paper companies as MIP protects them from aggressive pricing undercutting due to imports, and hence it will be improving their pricing power and margins as well, which is under pressure currently. Now, in November 2024, IPMA had expressed concerns over rising imports of VPB from countries like China and Chile, below cost shipments hitting the local producers. Now, let us look at the current market dynamics. The Indian paper industry experienced a tough Q1 FY26 with profitability strained by elevated wood prices and reduced realizations. The domestic paper industry continues to face intense pricing pressure from rising imports and elevated input cost. The imports of paper and paperboard have jumped sharply, hitting record highs, resulting in lower volumes and impact on sales realization for domestic players. High wood costs continue to impact the overall profitability of these companies. So certainly this is a relief for paper companies. Also, Care Edge expects operating margin to recover by 200 basis points in FY26 post the sharp dip seen in FY25. So overall, the long-term outlook remains positive for these companies.
Okay, fair enough, Upasna. So yes, definitely all the paper companies in focus today. Somil, anything on the charts that you'd like about these paper companies?
I think JK Papers looks great. It has just closed about 200 daily moving average. on the medium-term outlook, definitely positive. In the short term, you should avoid, of course, because there's been a very sharp rally on the upside. I'll be expecting a target of around 490 for JK papers in the medium-term outlook. So that will be a positional trade. Stop loss would be around 200 daily exponential moving average, which is 372. So keep a tight stop loss there, and you can trade, the stock on a positional basis.
All right. Thank you so much, Somil, as well as Anand, for joining in with us and taking us through all of the stocks. But with that, it's a time for a short break. We'll get you the top corporate voices along with the key market events to watch out for on the other side. So don't go anywhere.
Welcome back. Well, time now to take stock of all the big corporate voices of the day. In a CNBC TV18 exclusive, PTC India believes that an announcement on market coupling will be good for the market. The management said that all volumes were currently concentrated in IEX. He also said that HPX was able to contribute only 10 crore rupees to PTC India, but expects this to be higher after market coupling.
Well, next up is our systems. The company's management said that its Novigo acquisition will strengthen its presence in the agentic AI revolution. The company wants to stay ahead of competition, and Novigo has been posting over 20% EBITDA margin. The company's management says that the momentum in large deals is back with AI as a key differentiator. The company is confident of posting market-leading growth ahead.
Finally, V-Mart Retail has said that the firm is targeting high single-digit same-store sales growth for FY25. The firm's management said that it was cautiously optimistic on same-store sales growth going forward. The firm has also seen high bill cuts and consumer footfalls in Q1. However, it expects some pressure on margins and is not very optimistic about an improvement on this front.
And before we wrap, we bring you some key market events to watch out for. Upasana is standing by with those. Upasana, over to you.
First up, let us look at the global economic cues. US consumer durable goods and home price index data will be out tomorrow. And mind you that the Fed's Barkin speaks tomorrow on the economic outlook of the country. Coming to Japan, core CPI data will be out tomorrow. And now let us look at the key stocks in focus on the back of corporate action. HDFC Bank will be in focus as the bonus issue will be done tomorrow in the ratio 1:1. Karur Vyasa Bank also in focus on the back of this bonus issue in the ratio 1:5. And DRC Systems India will also be in focus as board to consider fundraising plans tomorrow. Hence, all these stocks will be on our radar. Now, lastly, coming on the IPO corner, Vikram Solar will be listing on exchanges tomorrow, and Vikram Engineering, that is a 772 crore IPO, also opens for subscription tomorrow. So all in all, looks like quite an eventful day tomorrow.
Okay, all right. Thanks very much, Upasana, for that. And on that note, it's a wrap on this edition of Markets Forward. We'll be back with